Hello everyone, the AllianceBlock token Nexera has been on an uprise over the last few days. And I guess if you clicked on this video, you want to know what's behind the Nexera token and what potential it has for the future. As always guys, we will have a look on the project itself, the team behind it and the tokenomics. So if you're ready, let's get started. To kick things off, let's talk about first what the AllianceBlock project is all about. Traditional institutes are only watching the DeFi space from the sidelines at the moment and are unable to participate in the massive innovations mainly due to compliance and regulatory restrictions. The questions has become how to connect traditional finance markets with the decentralized and digital asset markets in order to allow a seamless and compliant flow of capital between both worlds. AllianceBlock aims to exactly do that. AllianceBlock's goal is to bridge traditional finance and DeFi to add value to both areas and therefore create the future of finance. The protocol will be built as a series of interconnected but independent modules. These modules will combine to form the AllianceBlock protocol but can also operate as standalone products. So you can think about the AllianceBlock protocol as a basket of plug-and-play tools from which traditional institutes can choose to comply with traditional regulations to enable DeFi for their clients. The initial product set includes 7 products. One of these products is the trustless Know Your Customer and Anti-Money Laundering Identity Verification module. This will allow users to prove their identity in a trustless manner while also giving them control of their data. Another module, once verified users can share the data across the wider AllianceBlock protocol and start using the product while being compliant with the regulations in different jurisdictions. This includes products such as the compliance peer-to-peer lending, borrowing and investment protocol, which allows the likes of wealth managers to digitize real-world assets and have investors lend against them. It will also feed into the DeFi investment terminal, which will give users access in real time to granular and actionable blockchain data and aims to be the DeFi Bloomberg terminal. The data tunnel module will make it easy for anyone to publish, monetize, use and analyze data. The pricing engine will provide derivatives and structured product pricing and cutting-edge risk analytics. This will be able to, for example, solve the risk of impairment loss for liquidity providers. It will be open to all DeFi liquidity mining programs. The last major module is the on-chain investment data API. The API will house both on-chain data from multiple blockchains as well as data from specialist providers. This can be used by DeFi partners such as Parsec, Chainlink and API3, as well as traditional firms aiming to build new innovative trading algorithms. These first 7 modules represent the foundation of the Alliance blockchain ecosystem and a fully decentralized, globally compliant capital market, which will allow both traditional finance and decentralized finance players to connect, interact, and eventually ensure a flawless capital flow between both worlds, building the future of finance. Now let's talk about the team behind the AllianceBlock project, which are Amber Gadar, Matthias de Vries and Rachid Ashada. Together, they bring a wealth of knowledge from finance, technology and entrepreneurship to steer AllianceBlock towards a promising future. Dr. Amber Gadar, a former trader with a doctorate in its field. Matthias de Vries, a blockchain architect with a strong technical background, and Rachid Ashada, the CEO and co-founder of AllianceBlock. Ashada's expertise extends to leading the AI research team at VeVe in France, showcasing his deep knowledge in analytics development, quantitative analysis, and data science. Apart from his pivotal role at AllianceBlock, he is also the founder and CEO of Nuant, which was established in March 2021. Nuant is known as the first unified platform for digital asset management, analytics, research, and intelligence, further indicating Ashada's entrepreneurial spirit and his continuous contribution to the fintech and DeFi space. Next, let's talk about the tokenomics of AllianceBlock. Nexera is the token behind AllianceBlock and serves as a utility token within the AllianceBlock ecosystem. The token plays a crucial role in bridging decentralized finance with traditional finance. aiming to enhance capital flows and technological innovations within a compliant and data-driven framework. The tokenomics of Nexera are centered around a maximum supply of 850 million tokens. The circulating supply is noted to be 780 million tokens, which is really good because not a lot of tokens can be dumped on the market and dilute the price. The scarcity, combined with the increasing demand for Nexera services, could be the fundamental for a potentially high upside for Nexera in the upcoming bull run. As always guys, remember that investing in cryptocurrencies involves risk, so do your own research before you ape into these projects. With that being said, we are already at the end of the video. Let me know in the comments down below what do you think about Nexera in the upcoming bull run. If you found this video helpful, don't forget to give a thumbs up down below and subscribe to my channel, and also check out my newest investment strategy and portfolio video for 2024. Thanks for watching guys, and see you until next time.
How can the institutional leverage DeFi? So I can take one simple example, is certificates. So most of you know certificate is simple instrument. It could be active managed certificate or certificate tracker. So back in 2016, Vontobel was one of the first banks that issued this, like a Bitcoin rapid certificate and Ethereum rapid certificates. And then I remember when we started to see how can you use yield strategies for yield farming that you can provide to institutional while using certificates. And there was a lot of legal uncertainties, because if I am lending money to a pool, I have to provide KYC of every person that is providing liquidity in this pool, which is absolutely impossible, specifically if we are dealing with AV, with Curve, Convex, and all these protocols. But now we can have legal framework where institutions can buy these certificates depending on the risk appetite. That are, of course, there is term sheet, prospectus, stress test, back test. And inside this money, it's deployed into this protocol. And the legal framework is just by interacting with smart contracts, it is legal basically to be able to wrap these strategies in DeFi and provide them into certificates. And we don't need to do KYC AML. So now we are starting to see legal framework for institutional to participate in DeFi without having all the burden of the KYC AML with all these people that are in these pools, which is very encouraging.